everyone, and thanks for checking out my channel. Today I'll be doing some continuation of a previous video about the RSI reversal strategy and giving a bit more details about how I do actually follow divergence confirmation with the confirmation of reversal and a couple of things to keep in mind before actually getting into the trade and making sure it is actually secured in case it is actually invalidated. So let's move on and have a look. First, I'll be looking at something I forgot to actually mention last time, but before confirming that divergence is actually validated, I'll be looking at bullish, bearish figure or candle. Typically, you'll be looking at reversal figure. Say, for example, we got that resistance or support here. We'll be looking at first, for example, bearish candle down here, then having some sort of hammer, something with a strong rejection on that level here, and then you will have some bullish candle following this. So that would be some signal to confirm on the last point of divergence, for example, touching the RSI trend line, that you're actually looking at some significant pressure going into the direction of the reversal. So that's one thing I forgot to mention before. But you cannot just trade on support resistance on just normal price action. It's best to validate with some reversal figure. Of course, you could have something also like candle moving down and then engulfing bullish, for example, candle. That would be another one, and of course on significant time frame. Now the other one, the first criteria following divergence confirmation and the reversal does actually happen, is to look for higher high. I take the example with natural gas more recently, and so the market was moving down quite clearly with continuous setup of lower low alongside that trend line, and at some point following a few divergence with a few point touches on the divergence here, we got that low at 150, and the price couldn't push lower than this and did start reversing. We could see here that was the previous high at near 2, then we have another one at 1.93, and following the reversal we got the first one at 191. So that one doesn't qualify as a proper higher high. As you can see here, it did fail to break higher, but we could see on the next move up that we did set first a higher low, which is very important. So in short, that the selling pressure is not able to push the price to where it was before, and the buyers are ready to buy higher. We got that engulfing candle as well. It was clear sign that the buyers had the control on the price. So the price did shoot up, stopped on resistance, but did set really shortly higher high on this, which is another confirmation that the reversal is in place. So that would be, so it's not necessarily in that order. So it can happen first the higher low, then higher high, or reverse. So it's not necessarily the in that order, but these two are very important. If that doesn't happen, for example here, and you continue to fail lower and continue and putting pressure on that support line here, it's very likely that despite the divergence you may have another touch on the RSI trend line and another breakdown of the price, and you will be looking for another support or potentially exiting the trade if it's pushing too low in terms of the reference point and the entry point. Now looking at the time frame, it's important in this look at the time frame to move from the lower time frame to the higher. Wouldn't go lower than 1 hour, but to look for higher high and low low, we'd start with the 1 hour and confirm on the move up that it's still valid as you move to the 4 hours. finally on the daily. Because you could have higher high on the lower time frame but not on the daily, and I think, for example, since you're looking at the divergence on the daily, you need confirmation of higher high and higher low on the daily as well, not on 1 hour or 4 hours, because that would not be aligned with the time frame you're actually trading on divergence. So that's critical as well to confirm the reversal and higher high, higher low, not to stick to lower or too low time frame and jump to conclusion that the reversal is in progress and it's all confirmed and it's all good, while actually it might not be. So that's one other important things. In the next another video I will talk about trend following, and following that kind of reversal here, what we'll be looking at in terms of following the trend. One clue is usually looking for golden cross, where you see the 20 MA crossing the 50 on significant time frame. So that one is on the daily, and then you'll be using the 20 MA as a dynamic support for the move. Should it break, it doesn't mean the uptrend is invalidated or we are resuming the downtrend, but it's a warning sign basically that the sellers are still in this market. And finally, I need to talk about this, but in trading and whatever the strategy is, it can always go opposite, and you can always lose the trade, even if the analysis is perfect, divergence in place, everything, all the criteria are ticked up, but still the price can reverse. We take that example here. Let's say we got this here, and then for some reason next week there's something new happening, and then that price is crashing down, breaking all the supports, breaking everything, making a new lower low, and here, more important, start breaking the trend line. It would mean that the price is getting some momentum back, can actually reverse completely the buying pressure, and of course, to keep that in mind, that's always happening. So the reason why we're checking divergence, we're looking at criteria to confirm the reversal, is to lower the chance for this to happen, and if that happens, to have a stop loss that's actually positioned not too far away, and make that trade, the loss not too big, and not getting caught on the wrong side. I would say for this trade, for example, it is a high probability trade of successful breakout at some point of that resistance, but again, it's hard to put a number on it. Is it 80% chance and 20% success failure? It almost doesn't really matter. Even if you get to 99, the 1% can still be right and make you trade failing. So just to keep that in mind, just in case. Don't want to be too confident. Size the position accordingly, and making sure the stop loss is in an adequate position, and some way it won't trigger a massive loss on your account. So yeah, that's about it. Next video I'll be having a chat and about trend following, and give a couple of tips. That's probably nothing really new that you wouldn't know, but just making some summary and yeah, trying to make that as short as possible and interesting, of course. Till then, safe trade, and speak to you soon. Cheers, bye.